It's Monday. That means it's Setup Monday here at Brave New Coin. Let's take a look at some charts. How bearish can we get this week? Will it be the week where the downward volatility chop explodes? Let's take a look at some of that. First, as a North Star, starting with the BTC USD cloud chart, the read is very simple and continues to be very simple. The correct way to trade this is to wait until we're back above the cloud. In mid-May, when we dropped below, it told you we're in trouble. In mid-April, when we had a bearish TK cross above the cloud, told you time to get out of those longs for the time being. So far, it continues to be right on backtesting. It is an excellent indicator using these settings, so I highly suggest investing some time and learning about the cloud if you don't know what it is or how to use it. But currently, we're below the cloud, right? And question I'm having with myself, can this thing mean revert to 44, which continues to print and will continue to print so long as we don't break 30K? The TK lines are close but not crossed, just like mid-April. If these things cross bullish while we're below the cloud, that says be careful shorting this. We have gone sideways for a sufficient amount of time. And if we perk up a little bit, I'm talking like 32, 33, then the odds of those TK lines crossing become higher. But just baseline right now, this is not a long. If you're like me, still in some coin hoping for mean reversion, I think that's slowly getting away from you. So if this does break up, which is probably less than a 10% chance, 44 is definitely the target, and or the cloud, whatever that is when it breaks up, somewhere around 40. But this has the potential and likelihood to break to the flat Kumo, which is 50% retracement of a high to low. If you are super passive, which is probably warranted here, considering legacy is melting as well, and a bunch of other stuff is collapsing. Lumber, a bunch of other speculative things are breaking down. Doge, AMC, GME, that sort of thing. We're losing retail, we're losing money to inflation. China's gone. There's all sorts of fundamental reasons to ignore charts right now and just wait to buy the dip lower. But as far as the charts are concerned, right, the cloud is telling you stay out. Just don't bother playing this. If you are long, you're trying to swim upstream in a stream that's getting faster, better, stronger than any long side of the trade right now. This is the 2-year MA and the 200-week MA down here. Historically, we've never held below the 200-week for any extended period of time, and historically, anything below the 2-year MA has been a buy zone. So using these together, we get a 14 to 19, we'll say 14 to 20 on this current day as far as a buy zone or a range. And if you are extremely passive, if you want to buy the most blood, the bloodiest blood, you're stacking bids towards that 200-week moving average. If you want to be slightly more aggressive, you're starting to DCA in at 20, but really none of this looks good here, right? Upside is 100K, sure, but this doesn't typically reverse midway through, right? It's done it maybe once in 2014, but this does not look bullish to me at all. Here's the ETH version. It's at 1337 basically, and not a penny sooner. And the 200-week historically hasn't really been a signal at all. Neither has the 100-week on ETH. So there's not really much to pay attention to other than this, which tells you to start DCAing in at 1337. If we look at the two big pitchforks for ETH and BTC, ETH is just starting to enter this like higher bound of the pitchfork. If it gets captured within this, 600 to 800, we'll say 700 to 800 is extremely possible over the next 6 months. BTC, a little bit of a different picture. It's already beyond its midline. And the downside, again, is between 14 and 20, kind of based on yearly pivots, based on the bottom of this pitchfork, the bottom band. Historically, being a buyer down here and a seller at the top on balance has been a great way to play it, with a midline break to the upper downside as sort of a sentiment gauge for where we are headed, which is another reason why you don't want to see ETH start to break down, because the ETH's midline on this rate of change, as aggressive as this is, the midline is still basically 700. And on low time frames, right? So if you're an investor, you're looking at this stuff every week, once a week, Monday, Sunday open, whatever it is for you in your time zone. You're looking at this, you're saying, oh, we're not any lower, or oh, the MA moved, I'm going to move up my bids a little bit. I'm going to shuffle things around. But you really don't have too much to do, if you're a long-term investor. If you're a shorter-term trader, or maybe you're both like me, you're looking at the 4-hour stuff and you're thinking, okay, this is looking more and more and more like a descending triangle. At the very least, it's a descending channel and potentially a mini falling wedge or psi type of chart pattern, potentially a macro falling wedge in here, depending on how you want to look at it. Potentially a micro head and shoulders as well, depending on how you want to look at this. It's kind of super ambiguous. I don't have volume on here, but it's descending heavily. So we are squeezing for a breakout one way or the other. And the way this is headed, it looks like it's headed lower. ETH, really the big thing to watch in the near term is 2K. If ETH can maybe inverted head and shoulders here or something in the near term over the next week or two without breaking 15, 16, whatever this low is, it needs an impetus to trade higher. It doesn't really have that. Every single high just keeps getting batted down. We kind of bear flagged, broke down, broke up, broke down, broke up, broke down. Just needs volume. Needs a story, needs some reason. People are going to think 1559 is going to be the savior, and those cumulative effects will probably take 2 to 6 months to kick in. Is it bullish when you're burning supply of anything? Of course it is. But that stuff isn't going to magically be bullish overnight. It's going to take time, like any halving, to kick in. If you look at stablecoin borrowing rates, these continue to just go to zero post May 18th, partially because a lot of the speculators are gone, partially because we just keep printing more and more stablecoins, and these rates are naturally just going to go extremely low. This is something to watch closely. If we start to perk up, what do stablecoin rates look like? If those follow price, that means people are speculating again. You don't borrow stablecoin to short for the most part. You're borrowing stablecoin to long DeFi and speculate. And we may never see rates like they were previously, so long as we just continuously print USDC specifically. We haven't printed anything on Tether since China left for a few weeks now. So USDC just keeps printing. Rates keep going lower as far as borrowing and lending. We had a pretty big put at 20 to 22K for BTC, which means this person thinks price is going lower in a big way, 500 BTC. So that is a massive trade, which you probably only take if you have conviction and or are trying to hedge. So that's a pretty big signal to the market as well. DeFi perp, the DeFi aggregation index or aggregate index broke up a little bit from June 16th and then just completely has retraced. Just no holds bar, no break, straight no chaser, retracing all of that. Really hard for people like me who trade a DeFi fund or DeFi portfolio to hold on to any profits when it goes up and down like this so quickly. Grayscale announced today that they released a DeFi or plan on releasing a DeFi index fund, mostly with 50% Uni, Aave, Sushi, Wi-Fi, SNX, Comp, UMA, some other stuff in there. But it's mostly going to be Uni. Market didn't really react to that news in any way. As far as on-chain activity is concerned, active addresses continue to decline. ETH in the green, BTC in the red here. As far as transaction counts, those have kind of stabilized. Those have kind of flatlined. ETH kind of holding, probably in some of the DeFi stuff, and BTC just kind of flat here at 212,000. ETH still has 1.82 million transactions per day on any given day. So that's impressive considering price continues to melt down. It's almost price agnostic. Active addresses, though, are not price agnostic. By the looks of it, those have continued to melt. BTC hash rate finally is starting to tick up slightly. It just had the 4th negative adjustment in a row. I think that's possibly the biggest string of negative difficulty adjustments ever, at least in modern times since 2013. So the China mining ban wave is and was significant, and anybody telling you otherwise is kidding themselves. Just look at the numbers here. Price will impact these numbers as well as far as hash rate, but usually not even to this degree, even when price is down from those highs, because miners now are still in profit, probably down to 14K or less as far as what they get for electricity costs and overhead and that sort of thing. And then looking at a few others that I still think are great setups and trades, BNB USD. Every regulatory 3-letter agency in the world is trying to break down this chart right now. They're going after Binance. I don't know when it's going to happen. I don't want to be a fudster. Google Binance, and you'll see what I mean. But this pair will likely not survive, I don't think, if the regulators clamp down the way it looks like they're going to be, especially if crypto looks like it's going to break down anyway. And I don't think BNB is going to be spared. So I think that's a great short setup as far as head and shoulders are concerned. As far as legacy stuff, the VIX has exploded today, and we do not move up in crypto when the VIX is rising. It just isn't what we do. VIX rising is a risk off trade, and crypto is risk on heavily. So we need VIX to calm down if we get bullish again, if we're realistic about it. And the DXY is continuing to post weekly highs. And again, we are not risk on if the DXY is painting this inverted head and shoulders on the weekly with this edge to edge move or just flat Kumo, right? The same principles that apply to this apply to the BTC chart, right? The difference is this looks like a descending triangle head and shoulders, and this very much looks like an inverted head and shoulders, right? So the probability of this breaking up is significantly higher to its mean reversion than BTC is to 44. Now that doesn't mean they both can't break to 44 eventually, but this looks like it's going to break to 96 first. If this breaks to 96, BTC will not be breaking to 44 in the near term. If anything, it looks like 20 to 24 in the near term is certainly more likely if we break this diagonal level at 30 to 31. So a lot of people are going to be on edge this week. Have a plan, have a setup, know what you're doing. Try not to capitulate out of emotions. If you're going to sell, do so out of following your plan. That's really the biggest thing I can say. Not trading advice, just general advice. Have a plan, follow it, know what you're doing, know what your breakpoints are, know where your stop levels are. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio that I trade for Techemy Capital and Enzyme.finance, non-custodial portfolio management tools where you can send ETH or USDC. And in the smart contract that allows me to copy trade those funds, you can see everything: AUM allocations, performance, trades. You can see me in and out of some lending stuff. You can see me going into a yearn vault because the DAI lending rates were slightly better than the USDC lending rates. On the DeFi side of things, you can see me in a bunch of stuff still. And when I did all of that 5 days ago or more at this point, just a lot of yield plays. A lot of this stuff is being held based on yield plays, as well as just sitting at multi-month lows, multi-week lows. As a longer term prospect, stuff still looks okay for DeFi. The bigger issue obviously is if we break down 50% in the near term, any of this is going to look foolish. So keep that in mind. This is highly risky stuff, especially the DeFi side of things. For the ETH-BTC stuff, I'll definitely be cutting this BTC portion. Right now it's basically 80-20, 80% stablecoins, 20% BTC. I'll be cutting this if we break 30. So that's all I have for this one. Dislike, comment, share, subscribe. Happy trading.